Assalamualaikum warahmatullahi wabarakatuh and a very good morning. Today we will learn chapter 9 that is about accounting for non-current assets. So we will learn about 5 subtopics in the chapter. The first one is definition and types of non-current assets. Second one is compute and record the cost of fixed assets. And then we will learn about depreciation, disposal of fixed assets, last but not least, the presentation of fixed assets in the financial statement. Okay, about the definition of fixed assets. First, the fixed asset, it has to be consistent through time. And we bought the fixed asset not for resale. And also it has to be more than one financial year of useful life. The characteristics of non-current asset. There are three characteristics or three types of non-current asset. The first one is fixed non-current asset, second one intangible, and last one is long-term investment. So we go through first the fixed non-current asset. It can be touchable, means we can touch it, we can see it, example, land, vehicles, whereas the intangible non-current asset is it has no physical existence such as patent, copyrights, and goodwill. And the third one is long-term investment. Students, when dealing with the fixed asset, there are three important events. The first one is when we purchase it. How do we calculate the fixed cost and how do we record it? Second one is depreciation, also about calculation and we generalize it. Third one is disposal. Means the three events, the important event we have to make sure that we can calculate it and we can record it. Okay. Okay, students, let's move to discussing about the measure of the cost of fixed assets. There are two examples here, the car and bicycles. These two things we can categorize it under vehicle accounts. So how do we put a cost or how do we calculate the cost? Depends on this statement. All expenditures necessary to acquire the asset and make it ready for its intended use. So this is the measurement for the cost of fixed assets. Okay, this is the flow on how we calculate the fixed cost. We have the cost price from our invoice and then we have to add the cost to prepare the asset for its intended use from transportation charges, installation and testing, sales tax and legal fees. Okay. In this slide, it shows that we have really identified about the revenue expenditures and capital expenditures because revenue expenditures will not extend the life of the asset or do not improve the asset, but the capital expenditure is other way around. Okay, so revenue expenditure is not part of asset cost or we can call it as a period cost. Example is repairing cost. So the example of measurement on fixed asset cost, first is land cost. So when we calculate the land cost, we have to take into consideration the price cost of cost, plus the brokerage commission, lawyer fees, and other costs for cleaning and leveling the ground. Okay, example number 2 is like land improvement cost. Like we have a cost for fencing, paving, and parking lot, and sprinkler systems and basic facilities. Okay, these two examples about the land. Okay, the third example is like buildings. When we want to calculate the cost for buildings, we have to include the purchase price, brokerage commission, and renovation costs. Also, other costs to transfer the ownership. Last but not least is machinery and equipment. You have to include the purchase price, transportation charge, sales tax, and insurance while in transit, and also the installation cost and testing cost. There are only 4 examples here, but you can find more. Okay, let us go to the example here. On January 1st, 2019, the Syarikat Islah buy a machine to be used in business. Information on costs incurred with the purchase of machines as follows. Okay, the listed costs. Price in invoice ringgit, sales tax 100, transportation charge, installation cost, insurance while in transit, and also fire insurance. Total altogether the cost is 8,850. So how do we calculate? And we have to generalize it. From the question, we will do the journal entry. So we just draw the box which consists of date, items, debit and credit. Write the date on the day of transaction, January 1st, 2019. The items involved, debit machine and credit cash, 8,700 each side. And we have to write the explanation to the transaction. Okay, remember the previous slide showed that we calculate the cost 8,850. But why do we write 8,700 here? This is because we have to identify from the listed cost which is the revenue expenditure and capital expenditure. And we go through all the costs listed. We found out that fire insurance 150 is not the capital expenditure. So we cannot include 150 in the cost of machine. So altogether, the real cost of machine is 8,700. Okay, students? So this 8,700 you put on the debit and credit side. I want you all to do this exercise and then check your answer with your lecturer. Okay, thank you. See you next on our next presentation. Thank you.